Joining me to break this down is Ayokunle Olubunmi, the head financial institutions ratings at Agusto Co. All right, so let's get straight to it. NAICOM has announced the completion of its recapitalization exercise, with 48 insurers and 2 reinsurance companies scaling through. Now, what do you think of this latest development?
Yeah, good morning. Thank you for having me. Yes, we've concluded the exercise finally, if you can add that to it. I think the good news is that we've been able to carry out the recapitalization exercise after almost 2 decades. Various attempts to recapitalize the industry hasn't been successful, but this is the first time we've been doing that in 2 decades. So that's the good part about it. And also, another good thing about this exercise is the focus on investments in liquid assets. Because if you really examine the exercise fully, it's not focused on the capital base, but rather focusing on the liquid asset of the insurance firm. So you realize that some insurance companies didn't raise capital. All they had to do is to restructure their balance sheet such that they have more liquid assets. The beauty of it is that with more liquid assets, the industry is able to pay more claims. The ability of the insurance to meet claims obligation as and when due has been improved. And I think another good thing about this exercise is the entrance of some significant shareholders. We've seen some institutional shareholders, some shareholders with high pedigree in the financial capital markets enter the industry at the back of this program. And we believe that will strengthen governance, that will also even improve the quality of oversight that we are having on some of these insurance companies.
Now, would you say that the whole process went the way that a lot of people predicted? What was your own predictions and your readings on this?
From the outset, it was obvious that, look, we won't have a lot of consolidation because the body language of most insurance is that I'm fine the way I am, right? I don't need to consolidate, merge, or acquire another insurance firm. That one is there. And then also we agree that given the should I say the sentiment of investors, the insurance companies hasn't been too much the darling of the retail investors. We knew that it will actually be concluded that the capital will be raised at the back of private placements, right? And even anchor investor putting in significant stake. Yes, to what extent? I would say that everything goes as planned, right? At the way we actually even expect the exercise to actually even go.
All right, so let me, get your opinion on this. I'd like to know, how impressed are you by the amount that was raised? Should we start expecting larger ticket transactions in the industry, or is it too early?
I think it is too early. Because if you look at the amount raised, the whole amount raised is less than 300 billion. Just oppose that to what happened in the banking industry. The banking industry raised 4.6 trillion. The circa 300 billion that the insurance industry raised is even less than what some of those banks, each of them individually raised. So we won't expect that huge chunk, that leap in terms of the transaction and even the ability of the industry to underwrite transaction. I think the next phase, which is looking at your risk-based capital, we address it. But the beauty of what we've seen now is that there are some insurance companies that have been dormant over the last couple of years. This exercise forced them to re-examine themselves, forced them to go back to the shareholders, forced them to even look at the way things are doing. And one issue that we've been battling with the industry is also the level of liquidity of the insurance companies. A lot of them have legacy real estate assets that are not liquid, that counts as part of the investment portfolio. But this exercise has allowed them to even increase the proportion of liquid asset that they actually have. So to answer your question directly, not yet, right? We're still in early days. We still need more insurance companies to expand their capital base before we can be seeing huge ticket transaction underwritten here in Nigeria.
Okay, so far we've heard about 2 or 3 license withdrawals from NAICOM, and that's including Universal Insurance, which announced it's selling 7 billion naira stakes to FPNG Co-Invest to meet up with its recapitalization requirements. Now, do you see NAICOM rethinking the withdrawal of the insurer's license since it has a buyer?
This transaction is something that is going to be very difficult to comment on this, given that we don't have all the information. How do I mean? If you have somebody signifying intention to buy a significant stake, the question is, where are they in that process? Have they injected the funds? Are they still conducting due diligence? Have they gotten the regulatory approval? Because before you can have that level of stake in a particular industry, you need the approval of the regulator. So that one aside. On the other hand, also, we all know the Nigerian reinsurance issue that the Ministry of Finance is intervening on. So if the Ministry of Finance intervene based on how they determine this particular dispute, the treatment will also be applied to universal insurance. So at the same time, if universal insurance claim that the funds are available, can't we think of it as almost equivalent to somebody saying that, look, I want to have an insurance license? So like I said, there's still a lot of things to unravel here. The next couple of weeks, we're going to have more clarity about has fund been injected, what's the state of things. It's going to be clear, or whether the insurance company will be liquidated. We're going to know in the next couple of weeks.
All right, so let's take a quick look at NAICOM's final list. That it excluded 6 companies, 2 of which their licenses have now been withdrawn. What's the fate of these companies?
Now, for NAICOM not to come out specifically on the fate of this company, that means there is a lot of things going on. And if you remember, the Commissioner of Insurance mentioned that they have 1 or 2 potential mergers that they are examining. So there might still be some things that are still happening on the background. There might be some merger discussion. Don't forget that there are some out of these remaining entities, there are some that have even raised funds from the public, right, and the Commissioner of Insurance mentioned that, look, the funds are safe, right? So there's still a lot of things to be unraveled. So we still need more clarification from NAICOM, and I believe that in the next couple of weeks, if not days, we'll have more clarity on the fate of the remaining insurance companies.
All right, so are you aware of any active deals or strategic mergers currently pending NAICOM's approval?
Yeah, like I mentioned earlier, even the Commissioner of Insurance mentioned that there are 1 or 2 transactions that they are trying to even get regulatory approval on. But like I mentioned from the outset, even from the beginning of this exercise, mergers and acquisitions are going to be far in between, because if you look at the history of mergers, right, in the insurance company, it hasn't been too palatable. So a lot of insurance companies are worried about it. I haven't said that, yes, there are 1 or 2 mergers that we're going to see in the next couple of weeks. We'll have more announcements about that.
All right, so earlier on, you brought up a couple of dormant insurance companies. Now, one concern that has been brought to the fore is that some companies may have been able to meet the capital threshold without necessarily becoming stronger businesses. How do you distinguish between insurers that are merely adequately capitalized and those that are genuinely financially resilient?
Like I mentioned earlier, one of the essence of having this exercise, it has rekindled interest in the industry. Even practitioners are even going back, looking at their books, how things are being done properly. And I think to answer your question specifically, how do you know the ones that are relatively strong? Remember that insurance companies are mandated to display their financial statements once approved by the regulator in newspapers. Not only that, at their premises. So the first thing is for you to even look at their financial statements, right? What's the level of profitability? What's the level of capital that they have? What's the level of liquidity that particular insurance company will have? Another question is the track record of that insurance company. What's their track in terms of even claims payment ability? And then, of course, if their activities their financial strength has been verified by an external agency, for instance, like a credit rating agency, do you have a credit rating that can show the ability to meet obligation as and when they fall due? So that will also even help to even in the assessment of insurance companies to know their ability to meet obligations as and when they fall due.
All right, so now that there's a fresh capital that has come into the industry, where should we be looking for the biggest impact in terms of settlement claims, stronger technology? Where do you think it'll fall?
Yeah, there's something in terms of even where the insurance company will play. There's no way we can talk about that without talking about what even led to the recapitalization exercise, which is NERA. NERA 2025, the Nigeria Insurance Reform Act 2025. Let's not forget that that act also introduced some new classes of businesses. There are some that we already have in existence, but some are even brought into the act and some are even made more compulsory. So to answer your question directly, where would the insurance company be? A lot of insurance companies are looking at the retail segment, because the truth of the matter is that insurance uptake in the retail market is relatively poor. And what we've also seen is that to leverage that retail strategy, a lot of insurance companies are investing in their digital capabilities. Almost all the insurance companies have a digitalization exercise ongoing, just to ensure that they are able to even scale their operation, because with human intervention, there's so little that you can reach. But with technology, you can even scale and reach a lot nationwide, all over the country. So a lot of insurance companies are investing in technology. A lot of them are looking at the retail segment to see how they can even improve their offering. And now a lot of insurance companies are also looking at their products to even see that, look, are some of them already outdated? Are there some that we need to even refresh based on the current reality? So in the next 1 or 2 years, we are going to see the full impact of what's going on currently in the insurance industry.
All right, thank you very much. That was Ayokunle Olubunmi, the head financial institutions rating at Agusto Co. And he just gave us very important opinions on the NAICOM recapitalization exercise that was just recently completed.